over here. All right. So look, this is my trading strategy. Okay. And my trading strategy, the unity trading strategy, the strategy that I teach you every single day is about simplicity, and it's about knowing, when we want to get in the markets or not. All right. Now, one of the biggest difficulties in the Forex market, that is knowing when to trade. Okay. I know there's people here that understand how to trade, but have found it difficult to grasp when to trade. And I was having a conversation, we was in the Discord group. Guys, for those of you, I will at the end of this session, we'll go over a little tutorial of the Discord for the people that are funded, all right, or pursuing funding. Is that Jason was saying to me, bro, I've been sitting on my hands for a couple of days. I've had this account since last week or whenever it was, and I haven't really taken any trades. I said, fantastic. I said, well done. Because the most difficult thing to do when you've got an account or when you're trying to, you're trading the markets is to know when not to trade. Let me make a different, I like my metaphors and my analogies. All right. Let's have a different scenario. What about crossing the road? What would be a really good skill to learn when it comes to crossing the road? I'll tell you what it would be, is when not to cross the road. Yeah. When not to cross the road. I mean, if I was teaching my son or my sons how to cross the road, when not to cross the road keeps them alive. If I say, when you see this car coming here, or when you see this light green, no matter what, you are not going to step out into the road, no matter what. That keeps them alive. All right. Where what you find is kids just want to run across the road. When they want to go across the road, that's when they want to go across the road. They're going now. Yeah, they've got their shoes on, or they've got their bike, or they've got their scooter, and they are going now. And this is what a lot of newbie, young kid traders do in the market. They've got their account, or they know how to execute a trade, and all they want to do is squeeze the trigger. But if the markets are not right, if there is no setup, if the markets, you're trading in the middle of a range, then why you got your finger on the trigger? Like I said, we were sitting in this little middle range here and we're trading sideways. Okay. And I was like, yeah, let's I think even back on Friday, if we would go all the way back to Thursday and Friday, previously we was sitting around here and I was like, guys, because this I'm on a 4-hour. If I drop my time frame down, we was in the middle of a range. And then here we're looking at, Monday, Tuesday, we was in here in the middle of the range. That white box is equilibrium for me. What does equilibrium mean? Equilibrium means we're in balance. It's like, imagine when you've got something just on a, you've got your finger in the middle and you're just balancing something, and either say it could go either way. Now, what do I mean by that? Have a look what I mean by that. The market's doing ping pong. And remember my saying, the market's going to continue to do what it always done until it does something else. So we've gone ping. We've gone pong. Or furthermore, look, we've gone ping. We've come down here to go pong, but from the middle of the range, let's just go up a little bit more. Stops everybody out if you're thinking pong was going to happen. Now we're going to pong. Okay, let's go ping. We're supposed to be getting to the other side to go pong. Nah, let's just go back over here for a little bit. We're going back up here. We've come down into the middle of the range. We're supposed to be going pong, getting back to over here. Let's just go back over here for a little bit. What is my point? My point is the middle of the range is where I don't want to do anything. Now, let me flip that on the other side. Look at the edges of the range, of any range. Obviously, this happens to be consolidation. That's another question. That's another conversation. You want to trade consolidation, because a lot of people do and some people don't. It just depends how big that consolidation is and what pair you're trading in. But have a look at the other side, the flip side of the coin. At the top of the range, we want to do what? Somebody say it out loud and proud.
Still.
And at the bottom of any range, what are we interested in doing?
Buying.
So you sold over here, you made some money. You bought at the bottom of the range here, you made some money. You bought at the bottom of the range here, you made some money. You sold at the top of a range here, you made some money. Now, I'm not trying to say that this is going to happen forever, because we understand that any range, there is a buildup of liquidity that starts to happen. And at some point, the market is going to break out of that consolidation. But when I get to the edge of the range, I can have one thing on my mind. I can be like, this is sell opportunity. And if I see confluence, remember what we spoke about confluence? If I see things structure breaking bearishly, well, I can get in for the sell. I can place my stop above these places here. And I know that I've got a high probability that within that range, the market's going to trade towards the middle of the range. That could be where I'm going to take TPs, have a look at structure. Yeah. Well, I want to take TPs, boom, hit my TP, fantastic trade. If I was to get into that trade with a small entry, I'm looking on a 4 hour, but don't get twisted from here to here, it's 512 pips. Vice versa, I've come down here now. Look, say for example, the US 30. Look, if I had my way, I would always buy the US 30. You're probably going to be more profitable buying the US 30. Does anybody know why? Does anybody know why I say that maybe
because the daily average movement of pips.
No, I'm not giving you that. And whoever said volatile, I'm not giving you that one as well. It's to do with what this pair is. It's the US 30 and why, is there probably a slight edge in buying this market?
Because it's the 30 biggest companies in America.
That's right.
And the ultimate goal is to grow the companies.
Exactly, and make more money. So ultimately, when I'm looking at this pair it has a capacity, it is wired, hardwired to go up. That doesn't mean it can't come down and crashing down with some speed. And there isn't someone else out here who turns around and says they like short in it. But look, I'm on the 4 hour chart, just looking at this chart here. We can see this market generally, that energy is just grow and grow and grow and grow. Now, I'm not trying to say this market won't turn over. It may do. We've seen it turn over in the past. Have a look at it turning over here, pushing down, making a retracement. Yeah, but by and large, this market, if I was to give an edge and a slight edge, a 60-40 or whatever, maybe, I'd probably prefer to jump in for a buy. Okay. However, that alone can't color my trades. That alone can't make me decide that right now I'm hitting the button. I need to read and react to what the market does. And you can read and react on whatever time frame that makes you comfortable. Now, some people like to trade, and some people say that they would, the higher time frames is where they want to trade from. 4 hours, 1 hour. Now, I want to say this. Everybody's got their own, everyone does their thing a little bit different. Yeah, you know that song, okay? We watched a podcast the other day from a guy, I think he's one of the head SMC, which is a prop firm, proprietary firm, trading, I believe, 8 figures, all right, who says that his edge, and he believes that the only edge in Forex is on the lower time frames, and he's talking about 2-minute entries. Now, what's right and what's wrong? I'll tell you what is, and what's wrong is if it makes money, it makes sense. And if it fits you as a trader, then it makes sense. This is very, very important. It's very, very important to identify who you are and what you can do. And I think my job here is just to expose people to the different nuances and different elements within the financial kind of realm of what you can trade and how you can trade. All right. For yourself, as in, so you've learned something. Okay. We all do want to make money. We all do want to, shortcut to success. But in reality, there is no shortcut to success. In reality, it takes you to, cut your teeth and understand what's happening for you to be able to take advantage of what's going on. So like I said to you, first and foremost, nobody who understands what I've been teaching should have been in here, figured to themselves that they want to take a trade from the middle of this range if they're looking for 10 out of 10 trades. Okay? Because this already was in a bad place. Now this market is up here, I'm slightly interested in it. Now, what I'm interested in this market possibly doing is I understand that above this level here, there is potential liquidity, or there is liquidity. Okay. Now, liquidity is essentially a pool of money. All right. And therefore, I'm thinking to myself, above this level here, even if that market wants to come down and make some sort of retracement, because I understand the market moves in waves. Yeah, I understand the market moves in waves. Yeah, so we've had a big push up into these levels here, breaking previous. I'm on a much bigger structure. If I go on a weekly, here was a level of structure. Here is another level of structure, but our market's really pushed past here, not necessarily come back and made that correction, yeah, on a bigger time frame, not necessarily. We can see lots of reasons the market might decide to come down there, some imbalances in here, imbalances in here. Now, this is a much, much bigger outlook. Now, if we zoom down to our daily, the market has definitely been making some higher highs. On a daily time frame, we did see a little indication here above this level and a little correction and a continuation, which would allow us to get in. It would allow us to have gotten in on a daily time frame and rode this push up in here. Then when it broke this structure, have a look. It broke this structure, consolidated, making an indication above this level, making a little correction, and then continuing. And then we're continuing to push up here. But on a larger time frame, this market may decide to come down here. Now, my concerns are is this. Can you see these blue lines over here? This blue dotted line and this blue dotted line. If I zoom all the way out, that is my range. See? And right now I'm in the middle of that range of these two blue lines, which I'm a bit concerned about, meaning there is a possibility this market could decide to come this way, as much as there's a possibility this market might continue to just ride up and get to the other blue line. Okay, so therefore, though this is a massive structure, so I don't need to care that much, but it's a possibility that the market can still go up or it can go down. So that retracement argument is possible. Yeah, even though we're seeing it breaking structure indication, that retracement argument, if it decided to come back down here, is possible, because from the middle of the range, anything's possible. All right. When I drop down here, this is my 4 hour. We can see how the market was making these lovely higher highs, higher lows, higher highs, higher lows, higher high. And at the moment, we are going sideways in this little energy here. But this is just like we was going sideways over here. Look, let's look in the past. Let's not just listen to Jay and make it up. We're looking at historical data. And historically, this market was going sideways over here. Yeah, just like now it's kind of going sideways. So the same way this market was going sideways here, we thinking to ourselves, maybe it's going to come down here and close this imbalance. Look at this imbalance in here on a 4 hour. The market did what? Just indicated, just corrected, just continued pushing up further. Now we are back in this box over here. So ultimately, even if we're looking at on this time frame on a 4 hour, what am I looking for? I'm either looking for an indication, correction, continuation, or I'm looking for within this top of the range, the market to start breaking structure and making an indication, making a correction, making a continuation. Okay. Or if the market really ready to go, ready to start its journey, then the market may give us a liquidity grab real quick. Oops. A liquidity grab real quick. So it's coming up here, making some smaller structure, grabbing liquidity, nam, and then decide to push down here. Let's do that. Might decide to come and start doing this. And that was the liquidity grab that could happen with speed. And then we start seeing this happen. The market has done what it needs to do. And now it wants to do something like this. So those three scenarios are all possible. To be perfectly honest, there's nothing else the market can do. So we're going to make an indication, correction, continuation, bullish over here. Okay. Let's do this. It's either going to be at the top of the range and decide, you know what, I still want to trade within that range, and it's not finished going sideways. All right. And it's going to do that, this one here. Or we may see this market say, oh, you know what, we want to go down now. We're overbought. We've been making a lot of bullish momentum. We want to have a little breather and make a correction or retracement. And before we do that, though, we want to first grab some liquidity, nam. And then we're going to go for our run. And this might happen for a good while. Might happen for a week. Might happen for longer. Okay. So these are the options that are available to you, traders. Those of you who are funded, those of you who are interested in getting funded or got a demo account, are the options of what this market can do. Now, within this bigger time frame analysis, there are going to be smaller opportunities. There are. Okay. And you know, when I'm turning around and saying these things here, even within here, to say, for example, this move, this red move. This red move. Before it does this red move, this market could always decide, like, it could be like this. This market could decide to do this red move like this. Come and close this imbalance first. Nam. Then come back up into here and then decide to start going this way. That could happen. Before this market does this green move, have a look. From here, the market could decide to first go and close this imbalance. And then go and do this. So on a smaller time frame, there are smaller opportunities, but understand overall, I've got these three biases of what this market may or may not do. So first and foremost, you can already see I've got my alerts that are sitting above this range, as and when this liquidity is going to be nam, eaten, all right? And down here, I've got some alerts. But on a smaller time frame, have a look in here right now at the top of the range. After this imbalance in here, can you see this imbalance in here? Has now been filled. This was the concern I said yesterday to the funded traders, them who was in the group. I said, listen, this market is in the middle of the range. It could push up and close this imbalance. Now, that means, yeah, you could trade that. You could trade that push up if you saw indication, correction, continuation. Or you could say, you know what? I'm not going to get involved. Me personally, like I said, I didn't like price action in here. But let's have a look. Let's drop our time frame down into our 15 minutes. Have a look. Right now, the market's come and close the imbalance identified by this block here. I know there's lots of squares here. I'm going to remove these red ones because you guys understand my principle of selling from up there. You understand the principle of equilibrium in here, market doing nothing, and potential buy area down here. All right. But right now, have a look. This market has been going sideways, okay, in here. And even within that box, it's been going, having a little sideways action. Have a look. All right, because the market came here higher high, higher low, higher high, and then it came down and made this low, and then it didn't continue breaking down here. It came back up and made this high. Yeah, so this is the range from up here to down here of some sideways action. And even within that box, the market overnight over our Asian session. Remember, if you've got any issues with sessions, you can always use this here, which is kill zones indicator, which is showing me that in Asia, it even got tighter. Asian session, look. Got tighter, yeah, in this Asian session. And remember what we said is when we was looking at this, is we understand that after the Asian session, we understand that when the volume kicks in, that's when we normally see the big move. And the volume is going to be that crossover between London and New York. Have a look at this example. Market was dancing around Asian session. London decided to start setting up that move. Crossover, boom. That move happened. Zoop, 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 all the way up into these levels. And there, here, we died off. In fact, we kept pushing a little pace, but then Asian session came again. We sleeping. London session, we may see some moves set up. So we're watching to see what that means. Does that mean that this market pushes up here and captures liquidity, getting ready for zoop, 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 all the way down here? Does that mean that market starts coming down this direction, closing some imbalance, getting ready to push back up into the level? Remember, we've drawn the little potential moves that this market may make. So we're looking at this right now and figure to ourselves, what are we going to do? So if we drop our time frame down and have a look at what's going on personally, look, I'd like to see a solid close. This was just this could be a little bit of a push up into this level here, but there was some imbalance. There's some consolidation here first. And we saw the market push up above here, indicate, but then it corrected all the way past market structure here. So this wasn't no move. There was no correction, no continuation. There was no continuation. Came all the way back down here. So it grabbed the liquidity up that was building up over here overnight. See, overnight here, there was some sideways action. All right. Grab the liquidity, nam, indication, corrected, but did not continue. So nobody pulled any trigger going for the buy. Everyone was standing there watching it. And now we came back down to the bottom of the range again. And look, it's just thinking about it. On the 15-minute time frame, it's just thinking about it. It's wicking down here. Do we really want to? I'm not sure. Maybe, maybe not. I want to see a close below here. On the 15-minute time frame, that's going to be in 1 minute and 5 seconds. On the 5-minute time frame, we did get a close here on the 5-minute time frame below this level. Let's have a look. Yeah, and the potential correction that's coming here when it's closed this smaller imbalance that was in here. Are we going to get a close below here showing a 5-minute continuation? Now, That would be a 5 minute indication, 5 minute correction, 5 minute continuation. Now that is weaker than if we had a 15 minute close, 15 minute retracement, correction, or 15 minute continuation. However, we have to look at it from the perspective of structure. So on a 15 minute time, on a 5 minute time frame, for argument's sake, can we see any structure in here? Okay, because this market 5 minute structure, if you really want to go there from a 5 minute perspective, is here. So on a 5 minute time frame, this was came down here, and it's from here is where this move with strength and speed exploded. 1, 5, 10, 15, 20, and a doji candle, bullish, breaking this structure, and this structure. So what does that mean? That means to me that from here, this area here, there was a lot of demand, there was a lot of orders. This battlefield here is where things really popped off. So ultimately, even though I could get a 5 minute indication, 5 minute correction, and 5 minute closure over here, bearish, okay, I'm going to be quite concerned whether we're going to break past this level here. Yeah, you can see a 5 minute candlestick zone, how I would draw it looking like this. Someone else would draw the order block looking. I'll show you both ways of different schools of thought, but this would be my bullish candlestick structure. Some people will take this whole level as an order block in here. So therefore, just looking at it like that, even if I get a 5 minute close here, maybe waiting for a 15 minute closure, 15 minute indication, correction, and a 15 minute continuation might be is going to be a stronger look to confirm whether this market wants to go down. Okay. Now for me, I have to go back to my bigger picture, my Russian doll, my, what do I think may be going on here? I'm still very concerned about this liquidity over here, which is this white line. I'm very concerned about it because I'm thinking to myself, if this market really wants to start rocking and rolling and going down, it may, not for sure, but it may want to capture that liquidity first. So I'm a bit concerned about that because ultimately, have a look, we're trading within this yellow range. Now, as well as I'm concerned about this liquidity up here, I still have to trade what I see because the market might decide that when the market came up here previously, or the second time here, it didn't want to grab the liquidity. There was liquidity above these highs. It didn't care too much. Came down here. It might come back up here again and not care. Yeah, it pushed, but look, the market came out, pushed up in here, didn't care to go up any further, came down. Came all the way back up here, pushed down, market come back in here, it might decide to come back down in here. So I have to trade what I see. So what I am waiting for, like I said, is an indication, correction, and a continuation, understanding that this is a swing structure and this is going to be significant break in this level. So that may mean that you may want to wait for this market to do this before you decide to get in. Now, if you're nimble enough, you can get in here as you start to see this market break in some smaller structure. If not, you can wait till a closure below this level with your stop, and the safest place to put your stop would be above here. The second safest, the more aggressive place would be here. That's if your entry is here. Okay, and I'll draw that out with the safest place to put your stop would be above here. Second safest place would be above this little high here if you took this entry. But if you're able to get an entry over here, an aggressive entry will be just above that high, taking into consideration any imbalances that exist, and the safest stop would again be up here. Okay, now this 5 minute potential entry over here, the concern is, watch, if I get a 5 minute close now in the next 1 minute, all right, and I get that 5 minute close, and I'm like, okay, look, Jay, I've got a 5 minute close below here, which we're not going to get. Who knows? We're not going to get. Got a minute. What's going to be the concern? Because that 5 minute close is going to be at 50. What would be the concern is that this candle, when it closes in another 5 minutes afterwards, or another 10 minutes, sorry, to make 9 o'clock. The concern for me is going to be that when that candle closes over here for argument's sake, red candle, the concern on the bigger picture is going to be, what about this imbalance now? So even though I've got a 5-minute indication, correction, continuation, that concern is that imbalance going to be over here. Do you see how the brain's working? You see how we're looking on these time frames and we're identifying these concerns. So remember, I'll say to you right now, we're looking at this. Look, this is a 5-minute close. This is a potential 5-minute correction. And then we might have a 5-minute continuation that goes and closes here. And if I do take that trade and I hit the button right there, the concern is going to be that on my bigger Russian doll, what about this imbalance that is in here now because of this from up here on this hour time frame? What about this imbalance that exists in here? You see how I'm taking that into consideration? So now this is eliminating and this is deciding for you of where you can put your stop loss, because that makes no sense me putting my stop loss here above this little 5-minute correction. Well, whoops, 5-minute correction here. It doesn't make most amount of sense. Let me not say that. It does make sense. It does make sense. It does make sense, but you understand that you're running that risk. And to be honest, when I'm looking at this now, this 5-minute correction above here, if we put spread times 2 as well, just about here, on the hour is kind of close this imbalance. I was thinking to myself that we was way off. We wasn't way off. So yeah, this is now somewhere where you could place your stop here for 25 pips if we get a closure here. A safer place would obviously be above that little wick over here, but here is on the page. I was saying that if it was here, for some reason I was thinking maybe it's down here. The concern is going to be the imbalance, and you'd have to place your stop over here. And I'm just saying to you, these things are showing you, because now I've got my stop above an hour imbalance, even though I took it based upon a 5-minute indication, correction, and potentially continuation that's going to close any minute now. Now, when that candle closes, I'm also looking at the time. You see? So this has got, on a 5-minute time frame, this has got 3 minutes and 11 seconds before this candle closes here, and it's going to make it 8:55. Do I love 8:55? Don't really love 8:55, but I understand that at 9 o'clock, we may get an injection of volume in the market that might make that 8:55 entry really good, or make that 8:55 entry want to kick back on me before being very good. Yeah. And I still have the concern about, are we going to cut through here? Now, if I'm willing to take that risk and that opportunity, because obviously I don't have to go in here full risk. Yeah, or I can go in here and place my stop at a place that I'm happy with. This market it might be the case that this market comes down into here, and I do get some joy. Maybe it comes down into here and it does tap into this area here. Maybe it does push past here and get into here, but then decide from being in the middle of the range. Again, remember, looking at our bigger ideas. Let's refer to that green one for argument's sake. Maybe this market pushes straight through here and closes this whole huge imbalance on the 4-hour, and then you're laughing your head off. Great trade. But maybe the market decides first it doesn't want to do that. And where's our other little opportunity one here? Look, this little yellow one. Decides it wants to come back in here. So for me, if I started going down here and I get into a 1-to-1, etc., in this trade, I'd protect my position. I wouldn't necessarily go and squeeze it up and take profits, but I'll make it risk-free because of that concern. You understand what I'm saying? Can you understand I hope you understand like a window into how I trade. Because of that concern, I'm going to make it risk-free. Now, if that concern wasn't there, I might be like, listen, I'm going to leave my stop where it is because I feel comfortable that I'm either going to win or lose this trade, but it's from a 10 out of 10 or 9 out of 10 situation because it's breaking structure. Yes, I'm still concerned about that liquidity above there, but remember, I cannot dictate when this market's going to go and capture that liquidity. I cannot say it's going now, because if that was the case, why didn't it go before? Have a look. If it's the case that when it gets up to the top here, it's just going to go and capture the liquidity. Look, here's an equal high. Here was an equal high. Over here, why don't we grab some liquidity then? So I can't turn around now and say it's going to go and push all the way back and grab the liquidity now. Why? There's no confluence, or no one's giving me a little whisper in my ear to tell me that's what's going to happen. So I've got to trade what I see, especially as a day trader. Like I'm not really overly concerned about what's going to happen in 3 months' time. I have to, I do the research. So I know where the ceilings are. I know where the hard stop is. I know where I'm going to hit ocean. You know what I'm saying? Where the land stops and it's water. I need to know that much information, but I'm still looking for what the opportunities are today so I can get in and out the market today. So right now, if, and I say if, because my money's still in my pocket, I have its indication closure on a 5 minute time frame below some of this structure that was in here. Because look, even though I drew this line like this previously, this line is going to have to change now. Obviously, I'm not looking where it's coming from. Or if you want me to leave that one there, I can do. I have to touch that last low before the high, because this last low is structure before this highest point. And the market has closed below that level and outside of the potential consolidation box, which is an indication for me. And now it's coming in this way, potential correction. My money's still in my pocket. So I haven't got no continuation yet, closure. Yeah. But maybe what the market wants to do is it wants to push back up into these levels, make sure everything is nice and closed up. And maybe in the next 4 minutes and 15 seconds, this candle comes down here and closes bang on 9 o'clock. Maybe we'll be able to watch this one and see if that's going to be the case. Because right now, it pushing back up into this level, I understand why. Because I've drawn it and I've been talking to you about it for time. It's because of the potential imbalance. If we go on the larger time frames, 15-minute time frame, we can see imbalance. We can see imbalance. If I go on that hour, it's not showing me an hour. It's the actual hour candle at the moment. So let's go. Let's say, for example, even half hour, imbalances in here. 15 minutes, imbalances are in here. And if you can't see these imbalances, let me see how I can do this. Can I do it like this? And can I do it like this? Yeah, there you go. This is our little indicator showing us imbalances. All right. So if this market decides to come in here and wick into this level here and then start coming down here and making closures, well, then there's no more imbalances above on the short term that should make this market be coming up anymore. But at the moment, there is a reason for it to come up there. The first imbalance was in here. That's been closed. Look, it was in here, between here and here. But that's been closed. Let me try and hide everything once again. And there's an imbalance over here now. So I'm interested to see what happens over here. And I tell you why I'm interested also is because I'm going to try and clean up my charts because it just looks nuts. Okay. A lot of education was going in here about different things. So we can get rid of this yellow box. I'm going to make this yellow box transparent and just have an outline, border, yellow border, yellow border, yellow border, yellow border, yellow border. Do I like that yellow border? It will do. All right. And I'm going to get rid of this. And we get rid of all of these scribbles. Okay. So as a day trader, like I said, when you're trying to get in and out of the markets, you have to factor in these variables. Yeah. You're ultimately, more likely to get wiped out and you're more exposed to volatility because it's daily volatility. All right. It's things that are happening in the day. All right. All this here is a candlestick zone here, which is a candlestick zone on the 1 hour. What is a big 1 hour candlestick zone over here? And the smaller candlestick zone sitting inside that 1 hour candlestick zone. So I'm going to mark this just so I know as a 1 hour candlestick zone. I mean that even if I was to get into a great trade and it was trading down into that zone, and I can see within that 1 hour zone, we've got, have a look, 5 minute candlestick zone sitting within a 1 hour candlestick zone. I'm going to be interested to see whether or not that market is going to be able to bust through that order block or that candlestick zone, that bullish engulfing candlestick pattern. But what I have noticed is, look, see that candlestick zone that's in there on the larger time frame when I was looking at the hour. Oops. That candlestick zone, what am I looking at? What am I seeing here? am I seeing here? One second. Let me get rid of these labels. I don't want that. There you go. So it's just confusing me, but I thought it's something that I drew in here. All right. So like I said, right now we're looking at this market here on a smaller time frame. We did see an indication over here. We did see a correction. Have a look at the correction where we are right now. 50% of that previous consolidation range. All right. The market actually came up here and took some liquidity from above this smaller range. Okay. The question is this market now going to turn around? Is right now we're going to start turning around and pushing down here. If it starts pushing back up here past 50%, well, then I'm not interested in the sell because I don't know why it will be breaking down here, closing below the consolidation, and then coming past this area and start closing back up here. On that basis, maybe we are going to go and push above one of those options that we had on there. I think it was the blue one, and maybe we're going to do the blue one. All right. So therefore, that is what I'm looking for right now. So right now, look, on the smaller time frame, have a look how I'm reading and reacting to these markets. All right. Let me try and clean this up. Let's get rid of that. Let's get rid of the scribbles. Let's even get rid of this little smaller consolidation that was happening. Is right now, this market has come down here on a 5-minute time frame. It hasn't really made no structure, visible, clear structure in here. Here would be the 5-minute high. Here's a 5-minute low. So we can't even say that this is any kind of breaking structure of that bearish break of structure. There's no smaller 5-minute structure in here. This has come from here and broken 5-minute structure over here, lower low. And at the moment, we're making the correction. We're at 50%, seem to be having some sort of reaction in here, but we don't know. What we was looking for below previously was a closure below here for us to turn around and say, look, we're interested in potentially getting into this trade. All right. And the concern was before we had this imbalance that was sitting here on an hour time frame that we could see. Or so it was on a 15-minute time frame we could see. And we're like, this market is allowed to kick all the way back into these levels and tap into this area. All right. So we might see a wick up in here, closing some imbalance, or a small wick. And then we might see it breaking structure here. Now, if you're wicked and bad and you're very aggressive, you could try and get an entry as it starts to break here if you think it's breaking some clean structure. But it's going to be difficult because it's going to be on a small time frame. It's not going to be on a 5-minute time frame because 5-minute structure is here. It's going to be on, it's not even going to be on a 1-minute time frame because there's not clean 1-minute structure from in here. So personally, the only thing we could wait for now, unless you're going to get very, very small, because there is still structure in here. These candles represent a low and a high. But you don't want to be in here in a 1 minute or less. So what we're currently waiting for in this setup is to see whether this is going to close below here. And potentially, depending on how it wriggles down here, we're going to decide to place our stop extremely aggressive after a last high, in this area here, or safely above this high and above this outstanding little bit of imbalance here. All right. That is going to be this decision that was going to be made. That's how we're going to be a stop like that, which is about 50 pips. And where are we going to be targeting? Well, first and foremost, we're going to be targeting this structure to see us hopefully get through this 5-minute candlestick zone and get through this level in here. So at this point in time, we're at a 1-to-1. When we break through here, look, some clear waters. Let me hide all of this. Some clear waters. Look at all of this. This is some clear waters. Now, whether we're going to get through there straight away, something else. But that is the potential area that we're going to be targeting, turning around and saying, okay, if we was to get into that trade, especially for the larger zone, around these type of areas, if you wanted to be extra careful above here, this little high here would be a target. Great trade. I can't even see. I'll have to drop it down a bit. Lovely 1-to-3, 1-to-4 trade. That is on the lowest risk, placing our stop above here. On an aggressive entry, could be nice. All right. So for the people that are interested in taking, that trading, this is something, and this is going to be pre-market. And that means that have a look at our history. Yeah. Have a look at the history. The history is that pre-market, pre-New York opening in the London session. After the market goes sideways in Asia, London sessions, we can see a move happen. That might be setting up for the other move that the market really wants to do, which might be that green, remember our options of pushing all the way up above that consolidation and grabbing the liquidity first. So what would I do? I'd be protecting my position before this time here. Yeah, I'd be protecting my position before this time or taking some profits. Okay, I wouldn't be sitting in this thinking, yeah, it's going to keep going, but it may not. That volume might come in there, and the traders really want to push it up first and grab the liquidity first before making a move. And you just been in this and made a lovely profits 1 to 4, and then sat down there and watch it go to 0 when New York opened. Okay, so New York opening, and you see the structure indicating correcting, continuing, bro, get out and potentially get in for your other idea. Okay, so it's the exact same principle in here right now. So I'm sitting here watching it. 5-minute time frame. Look, we have seen a reaction. All right. We have seen an indication here. We have seen a correction come up 50% of that potential consolidation range. We have seen a reaction from there. But the next question is, are we going to close below here to give me an excuse, to give me a reason to get in here? And what I'm going to do is I'm going to wipe my charts, guys, because all the education is blurring our life. Okay. Are we going to see this happen? And better question, when we get in, where are we placing our stop? Here, or are we going here, taking into consideration a little additional imbalance that's sitting in here on the 15-minute time frame? That's the choice that you're going to make. So let's just say, for argument's sake, that's going to be a 60 pip zone, because you're going to take into spread times 2. Or are you going to be aggressive, placing it above the last high for maybe 35 pips, knowing that if you do get stopped out, that, you know, if you see it wick back up in here and then come back down in here, that you will have to get in again. Okay, so you know the safest thing I should say to you is place your stop up here, get your win ratio up, make it 60 pips. Now, if you make it 60 pips and you see the market start coming up here and slowly breaking structure, indicating, correcting, and continuing in the wrong direction, you can always close yourself out of there early. You can say, listen, I don't like the structure of this. You can close yourself out there early because it wasn't just like a fast wick that happened at markets open, or happened that some news came out. Let's have a look at the news. Let's have a look at the news and see what's going on today as well. This is what we have to factor on a short term as day traders. We have to factor in these daily events. All right, because these daily events can add some volatility. Have a look at this. All right, the big one. I was still there. I don't know. Tell us about what's happening here. What's this?
Yeah, I'm still here.
How you doing there, bro? I haven't seen you for a little while. A couple man's been concerned. We had a couple guys say to me, "Yo, where's Al been?" I said,
Missing the fundamentalist.
Hold on 1 second. I'm still there, man. I'm still there. Lagarde talking at the moment, so the euro may move in the next, now. She's talking about monetary policy. FOMC. I've been obviously watching what's going on. Basically, the market is looking for not a hawkish tilt. They basically want to know when the first rate cut and how many rate cuts. At the start of the year, they were saying 5 or 6. Now it's down to 3 rate cuts. So they want to get an understanding from Chair Powell when the first rate cut will come. The issue here is the US economy is very, very strong. I don't know if anyone saw non-farm payroll a week or so ago, where the jobs came above expectations yet again. So the Fed are in a good position, but I've just got a feeling they're going to be quite hawkish. I think they want to slap the market down a bit. And if they are hawkish today, then, all markets will tumble, including crypto. So, it just depends on what he says. It's at 6 o'clock today due to the Americans. The clocks went forward, I believe, the start of the month. So, and then the most important thing is the forward thinking, which is at 6:30, where Chair Powell takes the questions. That is where the market moves. That's where people get their bias from what he says. So they'll be looking at what he says and they'll be basically analysing everything. So that's today. That's the big one. That's why the markets probably went up yesterday, and there's quite a few imbalances on a lot of the pairs at the moment. And also the yen, it was a damn squid. They did raise interest rates to zero, but again, it was a it was a damn squid, to be fair. And the yen got battered yesterday. So watch out for the yen. I believe that there will be an injection from the BOJ um, of liquidity to prop up the yen, and that is the conversation that's been going on. So yeah, lots happening. Last thing, Bank of England tomorrow at 12 o'clock. Interest rates will probably remain the same. So yeah, there's a lot of things moving the markets at the moment, and then obviously Easter comes where we have a bit of a lull in the market. Any questions, anybody, on anything that's been going on for the last few weeks?
So
You-
go on, Jay.
Sorry, you said the clocks moved forward in America.
America,
So,
yeah.
so at UK time, what time would it open then?
Open, right. The US Open would be at 1:30. The indices opens at 1:30. The US, they get to their desks probably around 12 o'clock our time, but 1:30 indices open. And it
Okay.
finishes at 8 o'clock instead of 9.
Okay, thank you very much. I've
Yeah.
noticed a
So
bit more volume from around 12 o'clock into the
yeah, it
market.
starts 12 o'clock, but you get their cash opening at 1:30. Normally, when you get news, I think the non-farm payroll was at 12:30. Normally, that would be at 1:30, but it's at 12:30 because of their clocks. They've gone forward.
Okay, thank you.
No worries.
Great information there because I didn't know that.
Yeah. You look at the volume indicators.
Yeah.
You see the volume. Yeah, you see that 1:30. It's all gone. Normally, the Fed will be at 7 o'clock, but it's going to be at 6. Until I believe our clocks go forward on the 31st of March.
Right. So guys, I'm just been looking at the euro as Al said that he was talking right now. We can see, when we look at this structure and we look at the bigger picture, you can see how this is the 4-hour time frame, and you guys are supposed to be able to draw these lines in a similar way that I've drawn these lines in, even though they're not great, making sure that we're touching last low for the highest point. Okay. And we can see how the market was in there and it started to trade between here and here. And then it broke indication of where it wants to go. And then it did what? Corrected. Where did it correct to? Say it out loud. Say it out loud, because it's like a dance every single time.
50%.
50% is one, but I'm not looking for that. I'm looking for another one.
Imbalance.
The imbalance, yeah. We've seen it come. So we've seen an indication. Have a look at this in the form of our take. This is just a random pair of opened as Al's seen it. Sam mentioned it. We've touched these levels in here, which is last swing low before this highest point. The market's come in here. And even within this impulse here, we can see a level like this. And we've seen the market come down here, structure, break that structure below here as it started making its way down. It broke that structure with strength and speed. And what did it also do here? Have a look. The hint is what I'm highlighting. What did it also do? The hint is in this highlight here that I just made a thick line. Price broke outside of the market. The market was trading up in this trajectory. Okay.
Closed the imbalance.
Price broke outside of the market here, making an indication of where it wants to go. And then it corrected and tapped 50% into the imbalance that it created. And then it continued. And we've seen price now running in that direction. Now, where would I be saying that price may be running to, which may be a place where you'd be putting your TP? You're looking at structure once again. You're looking at that market saying it's going to come down. And if this market truly is going to start breaking structure bearishly, but it should break past this limit. Now, would I be putting my TP right here at the tip of this structure? No. I'd be placing it before that level in here. Because let's imagine it decides that it doesn't want to break this bigger structure. which if I go to maybe my daily, have a look. See, my daily, this becomes a daily swing low. But say this market doesn't want to do that. Say this market wants to just trade sideways in between that structure for a little while. Say this market wants to come back down in here and then push up in here. So it's no point putting my TP all the way over here if I'm setting a TP there, because the market may not want to break this level right straight away. It might want to come back up here and do a little hokey cokey. You will place your stop before that structure as a TP. You would say, you know what? I can see that before this was a little level in here. The market was, I'm placing my stop in here. And that would be you turning around and saying that that's your trade. Yeah, on that bigger picture of how I was showing it to you, which was a 4-hour time frame of the market indicating, correcting, continuing over here. And you've been able to take that entry upon the close of the continuation there and been able to place your stop above that high. Now, from an aggressive perspective, let me show you the aggressive entry. You ready? I'm going to drop. This is the target. This is what I'm looking at. Okay. And I'm going to show you the aggressive entry. So let me try and get rid of the color and put a border on it. All right, and thin it down. So the aggressive entry is this. So whereas somebody else took this trade and they said, yeah, Jay, I'm in that trade and I got down here for a 1 to 6. I hopefully will be able to tell and say to you that I got in that trade also. But when it started to break structure, when this break happened, I was interested to see on a smaller time frame of an indication close down below the level. Have a look if I draw it as a line. Yeah, that this market came and indicate this. Here was it broke here, did a little shimmy up in here. All right. So that same trade as on just 15-minute time frame could have had an entry like this. Smaller zone again. And if you wanted to see a smaller zone again, is once again, it's the same principle. And have a look at that place, that position of where that stop was. Look, market came back up here, respected this area in here, continue to run. Have a look at this. When that market started to retrace back up in here, maybe we'll get it. I'm going to show you it, maybe. The market starts pushing up here. You got a great trade in here for argument's sake. Good, you're happy. Or you're still in the trade, who cares? But or maybe you didn't get this entry, but you see the market start coming back up in here, respecting your trend line up here, tapped in here. What are we going to be looking for? The same stuff every single time. This is structure on a 50-minute time frame. Watch on a 5-minute. On the 5-minute, this would be some structure in here. Last low before this highest point. I want to drop down to my 1 minute just to show you. So at this point in time, and this is the last low before the highest point, and this market is now trading within this range and this range. Can you see that? The market came up here. It's now trading within that range. What am I waiting for? Indication, correction, continuation. And for all purposes, have a look. That's us getting our stop all the way down to 3.4 pips. Now, hindsight is a beautiful thing, all right? Because it's not like to say that the hindsight's a beautiful thing. In the moment, it's more difficult. But the point I'm making to you is the strategy is the same. I didn't say, look, we're coming down here. I'm just hitting the button. No, I waited for the indication to break past this structure here. This was it. This is a close. Now I'm waiting for some sort of correction. Now that correction could have come all the way back up in here for all I know. I don't know what it wants to do, but it didn't. It said, I'm done. I've done with my correction. I'm closing. And that would have been me getting into the exact same energy, but here for 3.5 pips. And if you couldn't get in here on this smaller time frame, which I don't advise anyway, you don't have to be that small. I showed you the larger zones. Even here on a 5-minute time frame, the issue is here is, it's a bit difficult for you to be able to see on a smaller time frame on a 5-minute of where that correction was. This whole push might have happened against you. And then you've seen this little push here, which is not a great correction. I'd like to see a couple more candles and a closure here. Maybe you would have gone in like that, taking that trade like this. Stop up above here. I mean, that's still only 17, 18 pips. It's not like to say it's crazy. Yeah, it's not like to say it's crazy. But right now, because of this distance and because of the potential imbalance that you left up here, it's not impossible that this market doesn't get you in the red before getting down to some structure. That's not impossible, because where you got in, you left all of this back door opened. Of course, you left that back door open, which is that imbalance, that concern. Look at it, that concern. It's there. It's niggling at the back of your mind, like, it might come back for that. You understand? So I'm just showing you every single time the strategy works. It's about mastering and looking at it. Let's look at one more pair. Any pair you guys gonna mention to me, and we're gonna go have a quick look at it and try and see. We're gonna try and even back test it so we can do it live.
Can we look at maybe EJ?
Euro JPY. Euro JPY. And what I'm going to do straight away is I'm going to go to a bigger time frame. Let's just do that. And I'm going to go back a week. Just echo. All right, so I'm gonna go back a week, and then I'm gonna drop down. I'm gonna delete everything off my charts, and we're gonna have a look. Maybe I should have gone back further, but it's what it is. All right. So first and foremost, I want to know what's happening in my Russian doll. I heard someone the other day was like, "Jay, man, you go back really far," and I say, "I hear you, I do." And it doesn't have that much relevance. Well, it does have relevance, but not necessarily in regards to, you know, um, the world changes for sure. All right, markets change, but this is an all-time high. If I didn't zoom out, I wouldn't know that. I wouldn't know that right now we're near all-time highs. Okay, so therefore, hey, I can put in the same, concept of, are we going to break these all-time highs? Now it's in the back of my mind, or is this going to be the top of a range? And the market's like, you know what? I don't think Euro can break all-time highs right now, and it's going to start falling down just by zooming out. Just by zooming out and being able to say, okay, that's what's going on. All right. Now I'm going to go and drop down to a smaller time frame now, as I need to get more relevant. Because yeah, I mean, what's happening all the way back in 1993 ain't necessarily going to help me with my entry. But I can see here that this market has been making this bullish impulse, like so. Okay, we're accelerated into things. I could put another line in here if you wanted, like this. Now, sometimes these data points are anomalies. They're like some news events, but I don't really care because it's just showing me a guide. Look, if I wanted to, here's the top end. Yeah, I can get rid of this there. It's showing me the guide of the range. So now I know where we are in the potential range. All right. And then I want to zoom in further, because me going all the way back to 2021 is not helping me for entry. But what I can see here, have a look. As I can see, the market came up to the top of this potential range in here. All right, see how we're touching these data points, and then it pushed all the way down here. We didn't get a daily closure, but we got some wick action here. But it seems like there was a lot of demand flying in at this price point at 154, kind of a 155.00 level. To say between 154, there's a lot of demand that flew in here and pushed this market back up. All right, didn't give us no closures. The market came all the way back up in here and closed up this imbalance that was sitting in here. Because on a larger time frame, have a look. If I go to my weekly, see that? All of this is imbalance. The market pushed up in here, closed this imbalance, and actually came and wicked into a potential small little order block over here. All right? Or candlestick zone. I don't like to use the word order block. All right? And so we've seen this push. Have a look at that happen in that push. Pushed up like this. Okay? Now, on this bigger time frame, I'm touching the last low before this highest point. But on a smaller time frame, I want to know what's going on in this impulse, so I can touch the last low before the highest point. Let me drop my time frame down. 4 hours. Let's zoom in. See, I'm doing this systematically. I'm doing this like ABC. I'm looking in the manual. What's next? If we put together an IKEA chest of drawers, start at number one. I love putting them together. I separate all the little wood things and the little screws, the little nuts. I put them all in a little section. I love it. Let me put that in first. Let me flip that around. Like certain men out here, like they don't want to do it with the instructions. I like doing it with the instructions. You know what I'm saying? Like to see which screws the longer screw, and then use the longer one, use the B, not the A. Love that. It's the same with the trading. So I'm touching this highest point, this lowest point before this highest point over here. Therefore, this market came in here and look, this was structure. So at this point here and here, the market was trading between those two pink levels and then smash, broke that structure, making an indication, corrected all the way back up here, making an equal high, even slightly weakening above it. And then, you know, here it was a little bit like at this point in time when this market pushed back up in here into this level, what I could have done, coulda, woulda, shoulda, is said we've pushed up into this level. We haven't quite broken, closed back above it. Quite, it was all wicky. And if I started seeing structure breaking in here, it's going to drop my time frame to 1 hour. Once again, it's the exact same principle. What I'm going to do, here's a little angle that I put in here. I want to see an angle which is touching the lowest point before the highest point here to identify where there's potential structure. On a smaller time frame, we'll get more. If I go to my 50-minute time frame, it'll be a bit clearer. And here we can see some structure, swing low, minor structure, major structure. All right. So when I say major structure, I mean this here is looking more major. This here is looking more major. All right. These other ones are looking a little bit more minor. All right. Maybe this one's in here looking a little bit more major. And I'm waiting to see, watch, an indication below here, closing below here. Well, on my 50-minute, I don't really get a close that I like to see. I'm not going to lie to you, in a 50-minute time frame. Here I do. I get a lovely close below that level. And after that close, I don't just hit the button because I have my strategy, my rules. I'm waiting for a retracement that starts happening here. And then I'm waiting for a closure below, which I get about here. I could decide to place my stop above this level, which is my first aggressive entry, or a safer place is obviously above this swing high. Let's put them both in play. We'll put that one in play over here. And we'll put the aggressive one in play also, like so. Okay. And we've seen the market push down. Lovely, profitable, doesn't stop us out. Aggressive entry and a slow entry kept going. All right. Now, so this is that was showing the entry there, but I want to do this in real time because we've rewound it. So I'm going to go to present time. Let me see if we can take a trade and then play it back. But this is a great trade. Have a look. Woo, lovely. All right, lovely, lovely, lovely trade. You know, aggressive ones ran for 1 to 9, and the lower risk ones are 1 to 4.5 or 1 to 4.8. Great. So what's happening now? All right. So right now I'm looking at this market. I'm like, okay. Let's go back and have a look at the Russian dollars. This market did ping, did pong, expecting a potential ping again, maybe. But remember this box here, our bigger Russian dollar. This is the top. This is an all-time high over here. This level here is all-time high. All right. Now, is this market want to go and grab all-time highs? I don't know. But as a range, this is the top of a range, interested in selling. But, you know, there's potential liquidity above the all-time high. But does Euro JPY have the fundamentals and the energy to bust that? I don't know. Either way, I'm going to trade what I can see. And what I can see here on a 4-hour time frame is the market came up here to the middle of this range. Remember, in the middle of the range, the market can do what it wants to do. All right? So I automatically am a little bit like, but this is a much bigger range. All right? So, you know, there's still opportunities. And I can see on a 4-hour time frame that the market indicated what it wants to do. Corrected, deep correction, and then continued, showing me that potentially the market wants to get bearish here. And price broke outside the market here. Because the market, this trend line was a trend line, and price has broken outside that market. Yeah, indicating again over here, breaking some minor structures in here, and coming up here, closing some imbalance. And then we're currently sitting down here. So if I was to draw some lines, maybe I'll draw a line like so, showing the general energy of that push in that direction. If I wanted to put a bottom end in, I could do like so. And the issue is right now is we're currently at the bottom of a range. So even if I wanted to sell this range, I'm concerned about the imbalance over here. And I'm concerned the market might push up into this level here before I really want to take a sell from up on the top of this line here. I really want to take a sell from that red line here if I'm interested in selling. Okay. Let's drop down to my hour time frame. Oops, hour time frame. And at the moment, the market's come down here, hasn't quite closed below this level. And let's play it forwards. Let's see what's happening. Let me go drop it all the way down to 1 speed. Let's play it forward. 1 speed's too slow. Let's go 3 speed. We got a little wick below here, capturing what? Capturing potentially what?
Liquidity.
Liquidity that is potentially sitting below these levels. So even if this market wants to go down, nam on a smaller time frame, 8 liquidity, and then may want to come back up in here before coming down. Let's see if that happens. Yep. Is it? Yeah. Nam. So this is all part of the little liquidity grab. And at that point in time, our concern of that imbalance has been justified because it's come right back there and tapped into the imbalance. And what did I say when I drew this red line about the sell? About me interested in selling, but where would I want to sell from? I said potentially this red line, which is the top of the range. I can't just hit the button here. I'm not playing snap. I can't just be like, yeah, red, hit the button. I need to get some confluence. So I'm looking for break in structure. I'm dropping my time frame down. 15-minute time frame. I've got some structure in here. On the 15-minute, I can see this is like in here. Whoops. Like in here. But have a look. I'm going to drop down to 5-minute because I'm allowed to. And at the moment, but this wick was a little bit of a Mazzolini. Who knows what happens? Some news or whatever it may be. But we're looking at this little level in here of the market. If I wanted to draw some lines in once again, the people that like me doing that. All right. Let me make it a different color. Touching the last low before the highest point. Now the wick has thrown a spanner in the works. I don't know what news this was or what volatility that made this wick happen. I'm going to pretend like I can't see that wick. So no, normally. All right. So I'm waiting for a closure indication below here. Here it is, closure. And then I'm waiting for a correction. And I'm waiting for a continuation. I'm going to sit here. I'm going to potentially hit this button here on the 5-minute time frame. My aggressive stop's going to be here above that last high. And my safer stop for people that are lower risk averse, is going to be here. Now let's see what happens. I could get egg on my face. I'm just trading with my own language. I'm going through bit by bit of how I read the charts. I could get egg on my face. And if that is the case, it's cool. It's cool because I've managed my risk. And I'm only taking this trade based upon what I am willing to lose. Let's hit the button and see what happens. It's moving kind of slow, but the anxiety is there. Let's go to 10 speed. All right. So look, this trade got down to here. Our aggressive entry got down to a 1-to-1. Our safer entry didn't get to a 1-to-1, and the market started kicking back on us. Now, let me explain something to you. At the top of this range, as we know, the market is allowed to do the hokey cokey. It's allowed to go sideways. So as this market came down here, this wick was a bit of a concern. All right. This wick was a bit of a concern straight away. I tried to say, let's ignore it. But this wick was a concern because if we took this into consideration, this wick, which we should have done, I should have done, is we didn't really get a closure below this wick. This is the first closure was below this wick. All right. So if I could replay what I just said, in hindsight, which is a beautiful thing, this is the first closure below this. I tried to ignore this wick. I thought to myself, maybe this could just be unique to EJ or some volatility, or whatever, but this is the first closure. So therefore, this would be the indication, this would be the correction. We got no continuation. So at the moment, look at another volatility come and actually fully close that imbalance. Fully close that imbalance. So let's just say that we just took an L now. We took an L, no problem. I'm cool with it. Because in hindsight's a beautiful thing, but we should have taken into consideration this wick. But now this is imbalance is completely closed. I'm having a look at this once again. My markets come all the way here, tapped in, close this imbalance. Now, to be fair, like I said, our aggressive entry, possibly you would have made it risk-free. But I'm going to just take that one as an L. All right, because I really should have taken into consideration this. With EJ, I'm taking into consideration those wicks. I'm not going to ignore them for volatility. So we've put that, with markets pushed all the way up in here, came all the way down here and broke some structure on a smaller time frame. All right, potential indication of what it wants to go and do. Pushed all the way back up into here. I don't like it back up in here, so we're going to watch it. So right now, this market for me is like in here. All right, for me, this market is sitting in here. Let's play it forward. Right at the top of that range. All right, at the top of that range now, I'm interested if I was going to get take a sell, because I've still on, look, we're still here. We're still in this sell territory on that line that I said I'm interested in taking a sell from, but the market's just decided to do the hokey cokey first before it does that move. Okay, cool. I've put a little line in on the 5-minute time frame for this being structure. All right, here being structure, no problem. Let's see what happens. I'm going to play it forward a bit slower, and then we're going to finish up. Still in that range. Small indication. The corrections push back past this level, so no, fine. Waiting, still in this range. Let me try and pull that across. Market's doing the hokey cokey for sure. Market's doing the hokey cokey for sure. Watching it do the hokey cokey. Still doing the hokey cokey on the 5-minute. I'm going to go to my 50-minute time frame to just speed this up, give us less candles. The market is in this little area here doing the hokey cokey, and I want to know what it's going to do next. All right. All right. So now within that range, we're in the middle of the range, which I'm not overly keen about taking a trade from the middle of the range, but this market pushed up in this area here. It's pushing out here. I can wait. We're going to wait. I'm not even going to say I can wait. We're going to wait. We're going to see what happens here. Okay. Now let's look at this bigger Russian doll first. Let's look at our bigger Russian doll. Let's make sure we remember what's going on. Well, what's going on is this market was making higher highs, higher lows, higher highs. Now this is a bullish market. So at the moment right now, we're down at this bottom level here. We're not necessarily expecting this market to break this level. I don't know if you can see it. Sorry, I've faded it down. I'm not expecting this market to break this level. Okay. It may do, because from that bigger picture, remember we're at the top of this range. No, we're not at the top. We're near the top of this range. Okay. But we're not at the top of this range. Okay. So I'm concerned about whether this market's going to break this level. And I'm also watching what price does. Okay, cool. Let's go to our hour time frame. And this is really good, us being able to watch things like this, because it shows that we're allowed to hit play and see what's actually going to happen. I'm going to go to my 15-minute, give us more details, see what's going to happen. All right, so I'm hitting play. Let's go. Bottom of the range again, have a look. Thinking about it. Look at this. This is why it's so important that we draw these ranges, understanding where the market's trading within. Because it's not a coinky-dink that it just starts to trade within that box. It's because it's going sideways. So if you didn't identify it's going sideways, then down here you'd be like, yes, I'm selling. You want to sell at the bottom of a range? Or do you want to wait till it breaks outside that range? You're better off saying you're going to buy from the bottom of this range than saying you're going to sell. The only reason I'm not saying I'm buying from this bottom range is because of this red line, which I'm thinking to myself may be the ceiling that it wants to have a sell-off, but also because of this structure over here, which I said was the lower low, wherever it is, I'm not expecting this market to come and make a lower low. Not at this stage, not until it shows me anything different. So maybe it wants to turn around now. I don't know. Let's watch it. Remember, do your back testing. You're going to learn so much from your back testing, from being able to go back and see what's going on. Have a look. We've got an indication. Oh, we've got an indication outside of here. So maybe now that correction has finished, doesn't want to break that lower low. And maybe now we want to go up and make our higher high. All right. So if we was looking at this on a 5-minute time frame, for argument's sake, or we can go back to our 50-minute, doesn't matter. We got an indication here. And the market slightly, it was going sideways a little bit in here. So on a 5-minute entry, as soon as it closes above here, would have been an entry. But I'm going to tell you something. On a 15-minute time frame, there's a potential correction that's going to come into this level. All right. So this is going to be a 5-minute entry, and we can place it below here if we wanted to. Now, if we did place it below here, we have to make sure we're looking around and figure to ourselves, is there any reasons the market could come down here? There's a little imbalance in there. If you can't see the imbalance, you can use your little tool. See a little imbalance there, flashing red. All right. So potentially we want to place our stop below that little imbalance. Okay. But for the 15-minute level, this market's making a 15-minute indication closure. This is all indication. Correction could come down in here and close this whole imbalance scenario here. And then continue pushing up. Let's see what happens. Just tapped into that imbalance there that we spoke about, which is here, placing our stop below that level, below that imbalance. Let's see what happens. We're safe in here because we placed our stop below that imbalance that was shown here by that fair value gap that indicator that we won't show now. It won't show now because it's been closed. Let's see if now this market is gonna come and give us that continuation over here. Okay, let's see. I'm going to speed it up a little piece. Now, again, what would I do and what should you do? Market's going sideways again, man. The market's going, and again, if you see it happening, you can't just ignore it. That market is going sideways in here again. So once again, if you was here, you'd be thinking to yourself, bro, I'm waiting for another indication, correction, continuation. You don't know what's going on in the world, in the markets, or why it decided to break this structure and then now go sideways again. You don't know if it's something else has changed and now it's saying, you know what, in fact, we're going to do something else. So I draw my lines like this. I'd put my indicators, my alerts either side, and I'll be waiting to see what's going on. Let's hit the button. Woo! This looks like, at the moment, this is a very far, like here, we didn't get a closure here. Have a look on the 15-minute time frame. We didn't get a closure here. This is all wicks. Got a potential closure here with a real fast wick action down into these imbalances that were down here. Now, if I rewind this ever so slightly, you will see from the fair value, that little indicator. See these imbalances? See these imbalances? All right. I'm going to leave that indicator on. Let's play it forward. Oof. Let's get rid of some of those. All right. So at this point in time, I'd be thinking to myself, okay, we broke structure over here. Have a look. Boom. Yeah, right. So have a look. I'm going to lose this. We broke structure. So on a bigger picture, indication above this area, this and this wick action, which is really aggressive into the imbalance that was here. If I increase my time frame, you'll see imbalance in here. All right. Came potential deep correction. All right. Is this market now going to start doing this? Or is it going to start doing this? All right. Remember, this is us watching this in real time, having a look at this and trying to understand what we want to do. My larger picture is I understand this is a bullish market that doesn't want to necessarily break that swing low. And this Euro JPY has been bullish, pushing towards the top of this much bigger range. Let me get rid of this now. That much bigger gray range, an all-time high, wherever it is, wherever the top is. See it up there, that blue line. Okay. So let's have a look. Right now, I'll be thinking to myself, okay, we've just had a very quick liquidity grab. Am I going to start seeing, am I going to start seeing some structure broken to the top end? Yeah. Keeping in line with what the market has been doing, making these higher highs and higher lows? Or is it going to do something else? Let me drop down to a smaller time frame so I can see better structure. Now in here, there's a very big push down here and a very quick closure of that imbalance. So the market currently is trading within here and here. Let's see what happens. Watching it watching it, watching it. And the point, the times when I'm watching it is because there's nothing going on. There's no reason for me to say I'm going to get into a trade. And this is the bit of patience that people turn around and say, have patience. Look, I'm on a 5-minute time frame, and there's nothing really turning around and saying to me that I should jump into the charts. Yeah, my bias is the market has indicated, corrected, and may continue, but I need some information to, to base my decisions on. All right, let's hit the button. One second. Ooh, the market came down here, and we had a closure below here. So at this point in time, if I was to rewind, I'm waiting to see if I'm going to get an indication, if this is the indication, correction, and continuation. But that wasn't my bias. My bias was the market was on the bigger picture. This was the correction to continue. So as soon as I see this market pushes down here and then breaks the structure, which is here, it breaks that structure. I'm going to drop down to a smaller time frame just to show it to you. This would have been my last high before the lowest point. As soon as this market breaks that structure, indicates where it wants to go. All right. If you want to go there on this 1 minute time frame, corrects and then continues on a smaller time frame and is going past the 50% range, I'm thinking to myself, yeah, this market's going to be going up. All right. Now, you could have decided to take that trade here with your stop all the way down here, which would be safe, which would make sense. Or you could say, you know what, cool. I can wait for when it breaks outside of this range that it was trading within. Just done it here, massive indication, boom. You're expecting to see some sort of correction, to come back and into these potential imbalances. You can't see them. All of them little red below price, waiting for some sort of correction. But if the market comes and closes back above here, you can decide to say, I'm going to get into this trade here and place my stop below this level, which is the safest place. Yeah. Or an aggressive place will be below the last low, but all of those little red imbalances is a concern. Let's see what happens. So we got that there. Now we're going to put both of them in. We're going to put in the aggressive entry, which is not taking into consideration the imbalances below. And we're going to put in the safer entry. The reason why I do that all the time is so that you can see from the times that we do it, which ones are the most successful. So you can start saying, yeah, bro, every time I see Jay do this, the aggressive entry gets stopped out. Just see what happens. Yeah, this is in line with the bigger Russian dollar of us thinking to ourselves that this market is bullish, didn't want to break a lower swing low, it's breaking some smaller structure. On our time frame, look, we've just got an index. Have a look. Now going back to our bigger Russian dollar, we've just got an hour indication. After that hour indication, look, we're expecting to see a potential correction. And that potential correction could stop us out of our aggressive entry. Why? Because we can see all these reasons why the market might come down here and correct. Let's hit play. Whew. Well, both of them are good. The safe one is definitely good, and the aggressive one's definitely good. In this instance, our aggressive entry still did well. All right, the market didn't want to go and close that imbalance. All right, now have a look. As we broke above this level here, boom, and we broke this structure here, this is an indication if it wants to do what it wants to do again. And then when I see this correction and continuation, this is an opportunity if I wanted to scale in. But if I scaled in here, I would be concerned about this imbalance. So maybe if I scaled in here, I may have to make this trade risk-free and place my stop also with that other trade just below this low here. All right, let's have a look. Let's zoom out now. This market is now making higher highs and higher lows. Where is it potentially going to? Well, this has to be a landmark. We just hit that landmark right now. If we break above that landmark, I'm expecting to see a correction after breaking this structure and my potential continuation. That correction might come all the way down into this imbalance that's sitting over here. Let's have a look. Indication. And that's where we currently are right now. So though we lost that first trade, or potentially one of them was break even, right now we could have been in this trade. Our high risk trade is at 1 to 8. Our low risk trade is at a 1 to 2.5. Okay, so even if that was the case, we're still up 1.5, and here we're up like 8. Yeah. Now, what's going to happen now? Well, we've just broken this structure up in here, and I'm expecting to see some sort of correction. Does that correction have to come all the way back down on closing balances? No, but it is definitely going to be a concern of mine. So I'm going to pop in one line like this. I'm going to get rid of these now because we've seen this happen. Okay, fantastic, great trade. I'm going to pop, and this is taking into consideration these 2 data points. I'm going to pop another one like this, taking into consideration the last low before the highest point, meaning the market is currently trading within here. Okay, and the market could choose, if I go to my bigger Russian doll, to come back and close imbalances. If you don't want to draw them, you can use this. Close some of these imbalances. It could get very cheeky and come and tap all the way back down into this structure that was broken in here, boom, and come back up. Or more realistically into these type of levels. Realistically, I say that because it's 50% around of the impulse. Here's the impulse. 50% is that green line. So the market coming down here before continuing up is very, very possible. It's not impossible. It's possible. If the market closes just above here, well, I'm still in that trade. Everything's going good. But if the market goes there here and I want to take an entry, I've got to be concerned about the market coming back down here. So stop wise, I'd really be wanting to place my stop below this level, like, it kind of in here. All right. But that's where we are right now. So that last trade is running 1 to 8 on the aggressive one, 1 to 2.5 on the safer one. I just deleted the 2 entry points. But right now, my concern would be, after grabbing this liquidity above here, is this market going to break here? Now, let's drop down to a smaller time frame to see what's happening. Look, well, based upon what's happening, let me get rid of this. The market price has broken outside of this impulse here. Trading within this range. And the question I'm asking myself there, is this going to be, look, below this structure? Have a look. You can't see it on the 15 minutes, but I can see it. This is structure in here, some minor structure in here, some more of a major structure in here. All right. Now the market, we can see, has broken. If I go to my 5-minute time frame, it'd be clearer. Can you see? If I was drawing a line out here on my 5-minute time frame, it'd be like this. Taking into consideration the last low point before this highest point, and we can see the market closed below it, indication, corrected, continued. Not to say that we'd be, we're selling it, but I'm saying if you did decide to sell it, that would have been your entry. Every single time, it's the same strategy. All right. Now, the concern is, why I'm not saying you'd be getting in here to sell it, is because this here is this correction just coming here after our indication. Is it just going to correct it down to these levels down here to push back up? It might not be worth it, you getting in there. Yeah. So that we can see here the market has indicated this is all potential correction, that the market may decide to close down here and start pushing back down into this level, because the bigger Russian doll, is it coming down and correcting down to this level? That's the bigger Russian doll when we was looking at it over here, saying that the market has been quite bullish up in here. I'll go to like 7 on my 4-hour. Look, the market has been quite bullish over there. And we saw that when we put our indicator on, we had all of these imbalances that the market could decide it wants to come back down and close. So that's the concern. So right now, if I see structure breaking and I wanted to take a trade, it could be the case that that market wants to trade down. Where's our little indicator? Whoops. Wants to trade down to close. Imbalance. Another imbalance. And that imbalance here would be 50% of the impulse. And then at that point in time, it might say, I don't care about this one down here. I'm ready to keep going. So that would be my outlook on EJ. After buying that trade, bullish, everything's bullish. And right now we've seen price break outside the market. I'm either still in that trade, or I'm saying, you know what, I'm going to trade that retracement right now because we've seen structure broken. Indication, potential correction. If I'm wicked and bad, do you hear me say all the time? You could drop to a smaller time frame and possibly get a higher entry here. It's probably going to be very small on a 1-minute time frame. And as I don't want you guys there, it's unnecessary. All right. But if this market comes and closes down below this level, it's possibly going to keep running to that 50% level closing that imbalance? Possibly, but that is against the higher time frame trend, which is ultimately bullish. I hope I'm not confusing you. I'm just showing you how the market flows, and you can take advantage of these flows. It was flowing up here, then it broke structure, then corrected, then continues. Now it's flowing down here. Yeah, and this push on a higher time frame, breaking a higher time frame structure, means it must get a correction at some point. And if it's going to continue flowing down here, then it's going to close below here and continue potentially flowing to close the imbalance that was sitting wherever I put that 50% line over here. Yeah, this is how the market's flowing, and I'm reading it because I'm reading price action. And as a day trader, not as a swing trader or you're a position trader, you have to be able to read the flow of the market so you can make decisions about where to get in and where to get out and when to leave it alone. I hope that it's been insightful. You can always go back and you can go over my the video. It has been recorded. What I would say is, like I said, guys, if you're in here and you're looking for trades in the market, like I said from last week Friday, it's like, yeah, it's not really nothing too great I'm looking at. The US 30, I heard an alert go off. Let's have a look at what that alert was. The alert did something over here. I can't even remember how we was looking at this. We were saying that the market was, in a little range in here. Oh yeah, the alert was it breaking down, closing below that range. Okay. Well, it hasn't closed yet. We've got 4 minutes for a 50-minute close. And on a 5-minute, yes, I remember. We was looking at it as a 5-minute before, and we showed this 5-minute close, and we said it was coming back up here, started doing the hokey cokey. Potentially, we've just got a 5-minute close after the correction and continuation, just about here. Oops, wrong thing. Just about here. That is showing like it wants to be bearish. On a 5-minute time frame. On a 15-minute time frame, we still got 3 minutes. So this is when I turn and I say to you, aligning, if you want that extra confluence, aligning your closures with time. So I could hit the button right now for a sell. Yeah. But I haven't accounted for those 3 minutes, which is also going to be giving me a 15-minute closure. Yeah. Remember, I still said I'm concerned about whether we're going to get through this area here. But I could hit right now for a 5-minute sell, must stop above this level here for 40 pips. Okay. But I'm not taking into consideration if I be a little bit more patient in the next 3 minutes to take a trade to hit the button here. Now, sometimes you may try and do that, and this might run away from you in the next 2 minutes. You're like, oh, why don't I take the 5 minutes? No, I don't have a problem with taking a 5-minute closure here. I don't. All right, with my stop over by in here aggressively. Why there? Because of the imbalance. Look at the imbalance of this 15-minute. This 15-minute imbalance. If you can't see it, watch. We'll use a little indicator. See the imbalance? A little green in here. So the market could kick back in here. So I'm never going to place my stop here, which is the place it all the way above here, taking into consideration. I don't think it should go up here, because if it goes up here, which is past 50% of the consolidation, I think it's doing something else anyway. So here would be my stop right now. We have a 5-minute close that happened. All right, we might see a little 5-minute correction in there, closing some of these imbalances, but here I should be safe. So personally, right now, I feel like I will hit. In fact, I'm going to hit the button. I'm going to hit the button just because so I can keep an eye on it for the day, manage my risk. Market could come in here, close this imbalance first. I'll tell you what I'll do. As I'm late to this closure here, we'll wait. We'll wait right now to see if I can get a better entry up in here as it closes this imbalance. But ultimately, I'm able to hit the button straight away as this market gets up here if I want, or wait again for it to close below that level, which again will be a much smaller zone for 16 pips. What's the time? Oh, we've definitely run over. You've definitely run over. So we could wait till it closes here, but I do want to let you guys get on with your day. Didn't realize the time. I was getting carried away. And I'm just going to hit the button and place my stop above here. Or if I wanted to, I could go half risk, take it straight and place my stop above here. And I could go, when this market comes and closes below here, take the other half of the risk with a much smaller zone, just above this level, like that, and place the other half of my risk if I really wanted to. Okay. But for now, just to say that I've done something on this session, because this was a 5-minute closure. Over the hairs is above this 5-minute high. There is some imbalances above, but I'm going to take this aggressive entry because if this market starts closing above this 50% of this range, I'm going to be thinking to myself, it's doing something else anyway. All right. So cool. I'm going to hit the button. Now, you have to manage your risk. All right. You have to know how much 50 pips, which I know in my head immediately what lot sizes should be. Okay. And if you don't know immediately, you'll be out here using your cash back Forex, as I've shown you multiple times, how to use it. Coming in here, placing your instrument in here, US 30. US 30 in here, making sure that you've got this stop loss in pips, making sure that you've clicked this question mark, and know what your contract size is. Okay. Make sure you've got your account size in here, and you've turned around and you know, this is not correct. I know. If you don't know what your contract size is, you just go into your MT5 and be able to look at what the contract size is. And I believe it is like this for me. No, I'm wrong. Like this. All right. And boom, you take your trade, whether you're going to be 0.5%, whether you're going to be 0.25%, whether maybe this is how you make sure that you know and you understand. After a while, if you're trading a particular pair, you'll know what 100 is, you know what 10 pips is roughly, and you'll be able to always do the math in your head real quick. Okay. But yeah, I've hit the button for hit the button's sake. We could have waited for this to see another little closure below this level, because this market could make us hold our wee and push all the way back up in here to close these imbalances before deciding it wants to start doing this. Could do. All right. I don't want to see it coming and closing above here anyway, because I think something else will be going on. So for me, having your stop above here, your spread times 2, you should be okay. All right. If not, is what it is. I've managed my risk. Guys, good morning. God bless. Thank you for being here. The session has been recorded. I will also get our little AI summary so we know what's going on. What have I done? But yeah, guys, good morning. God bless. Please do your education, stay the course, and I will speak to you guys tomorrow. Remember, we've got our Discord channel, which is open. Anybody who was just at home or trading, you can go into the Discord. Let me stop this right now and show people our Discord. In fact, I'll leave this here. So we've got our Discord in here. Okay, now our Discord is a resource we used to use a lot previously, and we stopped using it for some reason. People were finding it, I don't know, we stopped using it at a time, which probably we shouldn't have, because there's lots of things that you can do in here in the Discord, and there's lots of opportunities for other people to populate data and information. Where's my Discord gone? Where is it? All right, so let's go in here in our Discord. You should be able to see my Discord, my page. What's going on here? All right, we should be able to, down here, if you see our channel, and in here we have some different information. In there, etc. We are updating this information. There's some information for free members, empowerment areas. Previously, we used to look at. It's quite interesting looking back over the past as well. And then we can see over here this United in Funded channel. You just go down and you click into this. You can do this on your mobile phone. You can do this on your desktop. And what it allows you to do is you don't have to phone anybody. If there's people loitering around, you can come in here and you can just unmute this and you can talk like a call. And if somebody's looking at something, you can share your screen in here and be able to share the screen and everyone to be able to see what's going on and have those conversations, etc. If you want to put your markup in here, we have for our in our actual United in funding, we do have a channel somewhere. Somewhere where you can go and place your trade ideas. For some reason, I can't see it right now. There it is. All right. Which is a lock channel, which has got the people that have been, who has told me that they're doing their funded channel. So in here, you can go in here and see some different things being put in there, some different conversations being happening, etc. Okay. So yeah, that's on your Discord. So if any time that you're in here and you see me in here or any of the other traders, you can just start having a conversation just by unmuting yourself and everything's going good. But guys, good morning. God bless. We have run on. Let me start my day. I wish you guys a fantastic day. Go and fulfill your potential. Love and blessings. I'm going to play something educational on here, and we're going to, if you can stay in a session, great. If not, I will speak to you later. Speak to you tomorrow. Have a great day. Maybe we'll put something on us that we can have a conversation about. Last time we had a good conversation with Sister Brenda, etc. We're going to play this guy here. His name's Sarah Garvey. He's quite interested, a bit controversial. Somebody who more than likely,
if you invested,
have an event with and have a little conversation with him at some point in the future. So let's see what he's got to say here. And this is controversial. The title is quite controversial. And
what up, guys? I am Sarah Garvey, and welcome.
Well, let's stop